Hey, Puppy Trades! I wanted to do a video analysis update on Peter Schiff's favorite sector. That's right, we're going to talk about the cryptocurrency market. And we're only going to talk about crypto in this video. But first, I'm going to have to establish some credibility, right? I get it. I'm a guy with a Twitter account and a YouTube channel talking about altcoins that are going to 5X. But two, I also want to remind that when I invest in a stock that has a lot of potential to the upside, or just generally when I invest in a stock that has a very high beta, meaning it moves a lot more than, say, the S&P 500, I take a much smaller position size than I do with a value stock like Pfizer, a value stock like Boeing, even a value stock like Disney, where I need to take a larger position size to get a substantial reward. With these stocks in this video, any that I invest in, I'm going to take a smaller position size, one, so I can mitigate huge drawdowns, but also because I don't need to take a large position to have a substantial gain. So let's establish a little credibility, right? I get it. He's talking about coins that are going to 5X. October 11th, 2020, Bitcoin is about to explode in all caps. Man, I was nuts back then. But look at these silly equal lines. Look at that silly Andrew's pitchfork. Connect the beginning of wave one with the high of wave one and the low of wave two. And would you believe it? That ended up being conservative. And then when it broke that high, I didn't say yay. I said, look at all these other altcoins that are going to follow, right? So when I say follow the leader, I'm talking about stocks in the same sector that have a history of moving together, where one big component has broken a very important high that other stocks haven't. So that happened. Bitcoin exploded above the late 2017, early 2018 high. And I said, I'm looking for Ripple to follow, and not just Ripple. I'm looking for Ethereum and Litecoin to go follow Bitcoin in December of 2020 and break that 2017, 2018 high. Ethereum and Litecoin have. Ripple only went up 600%. So I'm still having fun staying poor. Marathon Patent Group. This was back when I was crazy. I was nuts back then. I had a small following, so I was honestly very upfront. I said Marathon Patent Group is going to go hold above 15, and it's going to reach 28 by the end of February. That was 5 weeks from this post. Oh man, could you imagine if I posted a setup with a 5-week time horizon? That would be just asking for trolls. But let's look at June 21st. I said Marathon Patent Group is going to hold above 18, and it's going to hit 75 in 7 to 9 months. Now, both of these are very important. One, because they kind of prove that Marathon Patent Group was in an impulse structure. And two, both of these setups, I used the fact that they were on, that Marathon Patent Group and Riot Blockchain were on the bar chart straddle and strangle screener as evidence of my analysis. Now, I know what you're thinking, but he's been wrong about PayPal, right? He's been wrong about Neo. He's been wrong about all these stocks that are probably gonna explode, right? But here's the thing. We all have PayPals. We all have Alibabas. And we all have Rokus, but not everyone has these. Nope, not everyone has these. And I want to kind of bring in a third-party source to kind of say what reasonable expectations are. So this is one, I am completely paraphrasing. This is a guy named Tony from Options Play. He's a chief strategist at Options Play. And this is a video that he did called How to Trade Credit Spreads, Best Strategies and Tips. So a credit spread is when someone sells an option and then they buy an option that's a little further out of the money to mitigate their risk. So this is a strategy where someone is actually risking more money than they can get as a reward. So what he's basically saying is that even people who sell options, even people who are risking more money than they can potentially make, they're only aiming for a 60% hit rate, right? They're only aiming to risk to risk $1.50 for every $1 they make, and that can come out to a 60% hit rate, okay? And what he warns about is trying to get higher than 60%. He says if you're trying to get higher than 60%, then what's going to happen is you're going to end up, like, let's say you're trying to get a 90% hit rate on a credit spread. Well, what's going to happen is you're going to win very often. You're going to have a lot of small wins. But the one time you're wrong, that could potentially wipe out several months of gains, right? So why am I talking about this? Well, one, I think it's extremely useful to, as an option buyer, to understand what the option sellers are doing, right? What are their strategies? Because I probably want to do the opposite of that, right? If someone really likes to sell options that expire in 30 to 45 days and have a delta of 20 to 30, then I probably don't want to be buying options that expire in 30 to 45 days and have a delta of 20 to 30, okay? But the other reason I'm saying this is a guy who, he's been around for a long time. He's very experienced. I highly encourage, go Google, YouTube this video, how to trade credit spreads. But the reason that I'm bringing this up is this is a strategy where someone is risking more money than they can potentially make. And they're saying that they're only aiming to be right 60% of the time, right? So if someone who's risking more money than they can potentially make is only trying to be right 60% of the time, is it really reasonable to expect someone who's risking less money than they can make, or even say risking $1 for every $3 they can make, to be right more than 50% of the time, to be right more than 40% of the time? It's probably unrealistic to expect that, right? So we all have PayPals, right? Anyone who says they haven't had a PayPal where the low in May gets broken, they're probably full of BS, okay? So why am I talking about cryptocurrencies right now? Well, there's a little bit of a debate that goes on in the finance community. We kind of have this debate, this little dance that we do, where we debate are cryptocurrencies, are they, inflation hedges, or are they not, right? And what happened during this kind of huge rally that we saw with Bitcoin was that this rally in the winter of 2021, it coincided with a huge rally in oil, a huge rally in a lot of inflation plays, right? So they didn't move together that time, right? And I think that what's going to happen is we're going to see that a lot of the oil stocks, especially the leading oil stocks like Occidental Petroleum, they're going to have to digest some of these gains, but I don't think they're done. So let's just get into the Oxy count. We'll get into kind of more evidence that, we shouldn't be ignoring inflation hedges, right? And we can debate all we want, is Bitcoin an inflation hedge? I think that we're going to find in the future that even if the headlines play out, even if the fundamentals get a little, different, we're going to find that Bitcoin and the cryptocurrencies follow what oil just did and possibly even outperform what oil just did. So let's get into Oxy. Oxy formed a 1, 2, 3, 4, 5, a big wave 1 and a wave 2. Then from this low, it formed another wave 1 and another wave 2. And then it exploded past the 161.8% extension of wave 1. So this was preceded by readings on the bar chart straddle and triangle screener. It was preceded by readings on iVolatility.com's top 200 open interest and volume with low implied volatility rank. So both of those are completely free. I talk about them all the time. And it was also preceded by the bullish seasonality of oil. And all of that I pointed out before this happened. But this was a wave 1 and a wave 2, and Oxy exploded past the 161.8% extension. So in Elliott wave theory, is only trade waves 1, 3, and 5. They don't trade wave 2 and they don't trade wave 4. They prepare for it by getting cash ready to buy the dip or by hedging for it, which is, mostly what I do. But what I'm trying to show with Oxy is that even if this wave 3 ended right now at 49.29, and even if there was a pullback to the 23.6 to 38.2% retracement, a lot of times it's a sideways bull flag, we'll see some declining volume. But what I'm expecting is that even if, and I would never ever short a wave 4 like this, but even if Oxy pulls back, I think it would have another leg higher. And that would be the length of wave 1, place at the wave 4 low, wherever wave 4 ends. I think ultimately Oxy is going into the 50s, all right, the mid 50s. And I think what's going to happen is that's going to be wave 1, wave 2, and then in the mid 50s, Oxy will end wave 3 from the October 2020 low, right? That means that while oil stocks like Oxy and ZOM have some digestion to do, they're probably not done. And what I think we could see is maybe during some of this consolidation, we see other inflation-related vehicles play catch-up. I'll talk about more of those in the stock market, but I really want to focus on crypto in this video. More evidence that we've got recently for kind of the inflation sector. I missed this one. I picked uranium instead. I'm not regretting that. But man, I miss Peabody. Peabody is a huge coal producer. So this is a big kind of energy inflation idea. It formed a big wave 1, had an ABC wave 2. I saw it was 0% IV ranking percentile, saw some options volume, and I thought, you know what? I don't know if I'm going to post about Peabody. Maybe, I couldn't do Peabody. But Peabody exploded above this wave 1 high. So even though I missed it, it's giving bulls a lot of evidence right now that this was probably a wave 1 and a wave 2 that ended at the 50% fib. So I'm not chasing Peabody, but I think ultimately the wave 3 target is 27. And believe it or not, I think that's the minimum wave 3 target. We'll have a shallow wave 4 that retests the wave 1 high. Then the length of wave 1 places the wave 4 low. That can take Peabody into the 30s, right? So kind of like Oxy, Peabody might have some digestion to do, but I don't think Peabody's done. I don't think Oxy's done. And I think uranium fuels might just be getting started. So this is U. I think this was a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. I think from this low, it formed another wave 1 and another wave 2 at the 78.6% fib. I think it's within wave 3 right now. The minimum wave 3 target is 12.6 before a shallow wave 4 and a wave 5 higher. If wave 4 retests the wave 1 high and wave 5 is the length of wave 1 and places the wave 4 low, then uranium fuels can go to 18, right? So I bought uranium fuels here, I sold half here, and I kept holding through this. And I'm planning to sell kind of my next big lot, at 18, right? So if uranium fuels can go to 18, Peabody potentially could go into the upper 30s, and Oxy can go into the mid 50s, then that means inflation's probably going to continue, even if oil digests some of these gains in the short term. So maybe some of these inflation hedges we should look at. And another reason that I'm looking at these inflation hedges is because we're seeing, once again, very similar conditions to what preceded Marathon Patent Group's huge rally in June. We're seeing Marathon Patent Group on the bar chart straddle and strangle screener, seeing a lot of options volume coming into Tamara and come into HUT. So I think it's really important for crypto bulls to analyze the crypto market as a whole. And part of that is going to be analyzing the options activity on HUT mining, on Marathon Patent Group, and Riot blockchain. So if we just look at Bitcoin right now, I think from this low, it formed a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. And I believe this is another wave 1 and another wave 2. And so there's going to be a lot of bear counts floating around about Bitcoin that take it to, say, 20,000, right? And it's certainly a possibility that Bitcoin goes to 20,000. But what I'm going to try to show in this video is if we analyze the crypto market as a whole, if we look at some of these altcoins and some of these crypto miners, then we're going to get some evidence that some of those bear counts on Bitcoin, while they're possible, should not be the most primary expectation. The most important count for Bitcoin and Ethereum is just from the June low, very similar to Marathon Patent Group and HUT. I believe it formed a wave 1 and a wave 2, and it ended wave 2 at the 78.6% fib. So a tight, I know it doesn't sound tight, but for a very high beta, vehicle like Bitcoin, a very tight stop would be 33K. A wider invalidation would be 28.9K. And I believe the length of wave 1 places the wave 2 low gives a silly target of 73.7K. Now, I actually don't think that if this played out, that wave 3 would stop at 73.7K. It would go the 161.8% extension of wave 1, which would be much further than that. But what I'm trying to say is if Bitcoin goes to 73.7K and has a shallow wave 4 that retests the wave 1 high, then the length of wave 1 places the wave 4 low, ultimately, even in a kind of conservative view, can take Bitcoin to the lower 100K range. I believe the target for this red wave 3 from this cycle, from this low that happened in 2018, could ultimately be 109,000 for Bitcoin. So if it's above 33K and it's above 28.9K, then the next target in the bigger picture for me is 109K. And that kind of psychologically makes sense why they've made Bitcoin quite difficult. Now, let's look at Ethereum. I think Ethereum gives a little more conservative view. And when I say conservative view, it's not going to sound conservative. But I think that Ethereum formed a wave 1 and a wave 2. And this is it's a big something, all right? Conservatively, it's a wave 3 and a wave 4. The evidence that this isn't a wave 4 is that it went all the way down to the 61.8% retracement of this rally. But like kind of Bitcoin, it doesn't really matter. But what could a more aggressive view be? A more aggressive view could be that this is another wave 1 and another wave 2. Now, we don't really care about that right now. It's just something to think about in the future if Ethereum really starts to run off. So what could happen to Ethereum is that this is a 1, 2, 3, 4, 5 waves impulse from this low. And so if we take the length of this rally and we place it at this low, then that gives a kind of minimum wave 3 target of 5.3K. Now, very similar to Bitcoin, if this wave 3 played out, I don't think Ethereum is stopping at 5.3K for wave 3. What I'm trying to do is give a conservative estimate for what could happen, because even if there was a shallow wave 4 that retests the wave 1 high, I believe the length of wave 1 placed at the wave 4 low could take Ethereum up to 8,000. So Ethereum could go to 8,000, and right now 2,163 is a tight stop. I know it doesn't sound tight, but remember, these have very high betas. A wider invalidation is 1,709. Now, I'll say right now, for Bitcoin and for Ethereum, there's going to be a lot of bear counts floating around. And honestly, if we are just looking at Bitcoin and Ethereum, you can't really invalidate those or prove that they're not true, right? But what I always say when I say don't stare at the S&P 500, it's very similar to Bitcoin. We can't just look at Bitcoin. We have to look for evidence in other aspects of the crypto market. And a lot of those are altcoins. So I think one altcoin that looks particularly good, even if it's not going to be easy, is Litecoin. I think Litecoin formed a wave 1 and a wave 2. And I believe that this is a big wave 1 that is subdivided into 1, 2, 3, 4, 5 waves. Now it's ending wave 2 at the 78.6% fib. Right? So I am actually in Litecoin, and I'll tell you the truth, I don't have a stop. Okay? Where's the stop for Litecoin? Is it this low of 24? No, right? The low can't be 24 that I'm trading against. So I'm in Litecoin for the long haul. If it goes to zero, it goes to zero. And I manage that risk with position size because I think the minimum expectation is that Litecoin goes to 412 and explodes above it. Right? And then we'd be talking about a much further wave 3 target beyond that. So I think that one thing that Litecoin really is that it doesn't have a great low to trade against right now. But I do think it's a wave 1 and a wave 2. And I think this is another wave 1 and another wave 2. So that means if Litecoin goes and breaks above 412 at any point in the future, it's going to be within wave 3 of wave 3. And what I would expect is that it is about to do what Bitcoin did around this range. And I think that this is what ultimately is going to follow for Litecoin. And I think it's ultimately what's going to follow for Ripple. So if we look at Ripple, I know we're used to making fun of Ripple, but I don't think we're going to be making fun of Ripple too much longer. I think this is a wave 1 and a wave 2. So very similar to that pitchfork I connected with Bitcoin and Ethereum. This is the exact same kind of high that was formed in early 2018, late 2017. I think this was a wave 1 and a wave 2. I think Ripple is going to go to the median of this pitchfork. Now, when I first said that, people were crazy. People said I was crazy, right? But what happened? It went to the lower bound of the pitchfork, right? And now I think it's getting ready to go back to the lower bound of the pitchfork. So I think this rally from this low is a wave 1, and this is a wave 2. Now Ripple's at the 78.6% fib. So I think Ripple's kind of like Litecoin, where it's like, you know, can you really trade against 0.51? I think that I can trade against 0.51, but realistically, I like Ripple best down here, and Ripple has an extremely high beta because I think that the wave 3 target conservatively is the 161.8% extension of this rally. That's 3.07 before a shallow wave 4 and a wave 5 higher. But I really think that the eye is on the prize. This is a wave 1 and a wave 2. If I connect the beginning of wave 1 with the high wave 1 and the low wave 2, it looks like Ripple's going to follow Bitcoin, Ethereum, and Litecoin not only above this high, but to the median of this Andrews pitchfork. I know I'm always rooting for the laggard, but I think that Ripple is the ultimate laggard play. Stellar Lumen is a very similar idea. We'll go through some of these altcoins a little quickly. Very similar. I'm not sure where the stop would be. If I had to pick one, it'd be this small degree wave 1 high of 11 cents. Okay, and even that's pretty dang wide. But I think what this is a 1, 2, 3, 4, 5 wave 1 for Stellar Lumens. I think this is the wave 2 at the 78.6% fib. And I think what we could see is a lot of these altcoins start to get very hectic. I think the length of wave 1 placed at the wave 2 low says I don't need to take a big position in Stellar Lumens, because if I'm even partially accurate at all, it's going to 93 cents for what would be, yes, a conservative wave 3 target before a shallow wave 4 and a wave 5 higher. So higher risk, higher reward. Let's look at Solana, and I believe we're going to do Cardano as well. So we'll do Solana and Cardano. We'll talk about Dogecoin too. I can't chart Shiba Inu coin or Shiba or whatever that coin's called, the doggy coin. But anyway, here is Solana. I think it's a 1, 2, 3, 4, 5 wave 1. I think this is an ABC wave 2, and it's at the 61.8% retracement. So this is a good example of why I believe crypto investors have to look at the entire market, right? There's plenty of bear counts on Bitcoin floating around. And honestly, they can't really be invalidated if we're just looking at Bitcoin, right? But if we're not just looking at Bitcoin, right, if we're not robotic, no one can really recreate the bear count that sends Bitcoin to 20K without saying that Solana is basically going to zero, right? Or that Ripple is basically going to zero, or that Litecoin is basically going to zero. While it's certainly a possibility, I'm sure Peter Schiff would gladly say, yeah, no, that's actually going to happen. I don't think that's the most likely possibility. I think this is a 1, 2, 3, 4, 5 waves impulse. I think this is a 1, 2, 3, 4, 5 waves impulse for Solana. And what we're going to see is that I am a DuckDuckGo user, but we're also going to see that Sol USD is going to go the length of this entire rally, place this low, and that in the future could take it to 336. Now, there's not a great low to trade against, but what I'll say is if this partially played out at all, then yeah, 336 would be a minimum wave 3 target. There'd be a shallow wave 4 and a wave 5 higher. So that's why I kind of got to establish a little credibility, because I'm basically saying that I think that, Solana could 4x or 5x. Now, 55 is the 78.6% fib. That's usually a great level, but sometimes these higher beta stocks go below that. So even though, $45, that seems wide, it's not as wide as it seems, and the price target is quite high. So I do believe if this even potentially played out in the long term, we could see Solana in the 500s. Now, I know that sounds crazy, right? But again, these kind of high beta altcoins, they don't really do the conservative thing. If Solana's above 55, that lines up pretty well with the wave 1 high of 58. The length of wave 1 places the wave 2 low can take Solana to 337 for a minimum wave 3 target before a shallow wave 4 and a wave 5 higher. Dogecoin, oh no, this is why I really had to make some credibility in this video. I'll measure my retracements. I thought I had my retracements already measured. But basically, yeah, I think that this is a 1, 2, 3, 4, 5 waves impulse from this low. And this is a extremely risky idea. One reason that I don't really like Dogecoin too much is that it's not very deflationary, right? So Bitcoin, the supply is capped, right? Litecoin, the supply is capped. I don't believe that Dogecoin's supply is capped, right? So if one reason that I'm attracted to, some of these altcoins and cryptocurrencies is because they are kind of, in my opinion, deflationary assets, I'm not sure that I would be most thrilled about one that doesn't have a cap supply, okay? So I'm not really the biggest fundamental guy on altcoins, right? But I don't think that Dogecoin will sit out of a rally if Bitcoin rallies. And I don't think that if Ethereum and Litecoin and Ripple, and Cardano and Solana, if they all have their day, it's kind of silly to think that Dogecoin isn't going to participate. And we've also seen that whenever some of these e-commerce companies that we'll talk about at the end of the video, whenever some of these e-commerce companies talk about integrating, payments from Bitcoin and Ethereum, a lot of times they mention Dogecoin, right? So anyway, I think this is a wave 1 and a wave 2. Now this one, where could the stop be, right? 8 cents. I guess 8 cents isn't a horrible stop, but like a lot of these, smaller position sizes is the only way I'll be playing it. I'm not personally going to buy Dogecoin, but I do think this is a wave 1 and a wave 2. It sounds ridiculous, and it probably is, but Dogecoin can go to 84 cents in the long term for a wave 3 target before a shallow wave 4 and a wave 5 higher. Now, it sounds stupid, right? And one reason that I'm not too thrilled about Dogecoin is because it doesn't have a cap supply, but I think it's silly to think that if Bitcoin goes to 109,000, that Dogecoin would sit out of that rally. It's honestly kind of silly to think that Dogecoin wouldn't outperform on a percentage basis. But anyway, here's Cardano. I think this is a 1, 2, 3, 4, 5, a big wave 1 and an ABC wave 2. So this is probably the best risk reward besides Marathon Patent Group in this video, where there is kind of a clear 78.6% fib. Now, I will say for very high beta vehicles, the 78.6% fib can get clipped for wave 2. So that can happen, especially for a cryptocurrency. But I think if there's one kind of altcoin in this video, maybe besides Ripple above 51 cents that has a clear risk reward, it's Cardano above 67 cents. It can go the length of wave 1, place of the wave 2 low. It can go all the way to 3.80 in the longer term cycles. Now, one reason I might personally consider just letting it ride is because I think 3.80 is a conservative wave 3 target. It'd be followed by a shallow wave 4 that retests the wave 1 high. And then I'm going to sound crazy for saying this, but wave 1 place of the wave 4 low in the future could give a wave 5 target of 6, right? So it's extremely risky, right? All these are extremely risky, but there's a lot of upside. And I think one of the benefits of that is that I don't need to go all in. I can take a much smaller position size and still benefit if I'm even partially right. Now, here's Marathon Patent Group. We've seen this recently on the bar chart straddle and strangle screener, very similar to Hut Mining, where I think that the options activity on these stocks has to be used, in the analysis of Bitcoin itself. I think Mara is a 1, 2, 3, 4, 5 wave 1 and a wave 2. I believe this is another wave 1 and another wave 2. So right now it hasn't gone below 18. I don't think it will. And this looks identical to Bitcoin and Ethereum, where from this low in May, I guess it was late June, for Bitcoin and Ethereum, we form a wave 1. Now we have an ABC correction. The length of wave A, place of the wave B high is where wave C ends. And we just so happen to not be able to go below the wave 2 low of 18. So 18 to 17 is a great level for Marathon Patent Group to stay above. I think the length of this rally places this low. Says the next minimum target is that we're going to go be within wave 3 of wave 3 above 83. Now that sounds crazy right now, but if we get going, right, that's not going to be too crazy in the future. We can talk about much further targets down the road. They would be in the 3-figure range. Riot blockchain doesn't have a low to trade against, so that's kind of the drawdown with Riot, is that unlike Marathon Patent Group, there isn't a great low to trade against, but I think it's not too outlandish to say that Riot blockchain is probably going to move with Bitcoin and Ethereum and Marathon Patent Group. And those three have great levels to trade against. So I think that those are great levels for Riot bulls. And what I'm looking for is that Riot is a sleeping giant. It hasn't done what Marathon Patent Group, its kind of twin sister, already has done. It hasn't broken that February high yet, but I think it's going to. They both moved together during this rally. I think this is a wave 1 and a wave 2. I think Riot's kind of lulling us to sleep. Hey, don't buy Riot, right? Riot's the laggard. I'm not sure Riot's the laggard. I think it's going to go break above 79. And just like Marathon Patent Group, beyond that, we're talking about 3 digits. But that's not going to sound too crazy. And I think right now, if Marathon Patent Group is above 18, Bitcoin's above 28.9K to 33K, and Ethereum is above 2,160 to about 1,700. Those are great levels for Riot bulls to say this could be a very interesting wave 2 correction that's followed by, believe it or not, a rally that is larger than this. And it might be worth noting that this rally is from March to February, right? So it's not too crazy to think that maybe a year from now, maybe less than a year from now, some of these targets can be seen. So that's Riot blockchain. Now we're going to get into some ridiculous stocks. This is NCTY, the 9. I mean, they just give these the dumbest names, but if we're above 2.04, basically I think this is a wave 1 and an ABC wave 2. And what could happen is this is extremely high beta stock. I'm pretty sure this beta is like 4 or 5. If we hold above 2.04, it can go break above this high of 89, and we don't even really need to go beyond that, right? But what's kind of one thing about the 9 and SOS Limited? Well, they have extremely high betas, right? So for me, if I'm someone who is hypothetically very skeptical about crypto, I can take a very small position in SOS Limited and NCTY, and if crypto ends up being a fad, I don't really lose that much money, right? And if crypto doesn't end up being a fad, if it takes off, then SOS Limited and the 9, they could really outperform and kind of give me that exposure that I need. We look at SOS Limited. I know this sounds ridiculous. I get it, right? But what could happen is that this is the wave 1 low of 51 cents. This is wave 1 and wave 2. So what do we do to find a wave 3 target? Well, we take the 161.8% extension of wave 1, and that's I'm not going to say that out loud, right? But you can see it, right? And so what's kind of the appeal with SOS Limited and the 9? Well, if I'm wrong, I can take a very small position size and get rewarded, right? So that's kind of the Peter Schiff idea, where if I hypothetically view crypto, with the Peter Schiff mentality, I can take a very small position and say, all right, well, if this crypto thing works out, then I'm covered with the 9 and maybe an altcoin. And if it doesn't, then I didn't really lose that much money because I took much larger positions in stocks like Boeing and Pfizer and Disney. So here's ONLN. We'll get into the e-commerce stocks. I think one thing that isn't really an outlandish kind of, I'm not going to say assumption, but one thing the financial media has kind of helped us with, and one thing that I think is just going to end up being accurate, is that the e-commerce stocks are going to move with, or at least they're going to benefit from what happens in crypto. And I think in a lot of ways, crypto itself is just the e-cash kind of e-commerce idea. I think that ONLN really supports that message. I think this is a wave 1 and an ABC wave 2 for an ETF that holds a lot of Alibaba. It holds a lot of Amazon. We're going to talk about different holdings in those because I talk about those two a lot. But I think this is a wave 1 and a wave 2 for ONLN. Right now, we did hit below 42 and we wicked. We wicked at the 78.6% fib. There's not a great low to trade against, but I think this is a wave 1 and an ABC wave 2. The length of wave 1 places the wave 2 low can take ONLN to 106. So not a great level to trade against. Extremely tight would be 41. I think that for ONLN, Amazon above 2,700 is a great level in the short term to look to stay above. And if we see that Amazon breaks to a new all-time high, that's basically going to be the nail in the coffin that says that we're getting ready for the next leg higher in e-commerce. So ONLN would give us a lot more room to trade against in that case. So here's eBay. eBay's in ONLN. It's really one of the only e-commerce stocks that went and broke above this high of July 2020. I believe this was a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. And this also we've seen recently in the media a direct relationship with crypto. So I'm not a fundamental trader, but I do think that's kind of helping with the correlations right here. We start seeing that, there's a little bit of a relationship between these e-commerce companies and these crypto companies. eBay could be a wave 1 and a wave 2. If we hold above 45, then I believe this is a wave 1 and a wave 2. This is an ABC correction where the length of wave A places the wave B high is where wave C ended at the 78.6% fib. eBay can go to 85 for a wave 3 target before a shallow wave 4 and a wave 5 higher. I think eBay might be one of the best besides Amazon above 2,700. eBay above 45 could be a great level to trade against for e-commerce bulls in general. So here's Square Cash. Here's PayPal. PayPal hasn't given a great low to trade against, but Square Cash maybe has, right? And there's a little bit of a classical trading principle that says when someone's looking for the right side of the base to develop, one thing they look for is much higher than average weekly volume. And I think we're just looking at volume for a little bit, right? You don't want to get carried away with this. A ton of selling volume. Very higher than average weekly selling volume for Square Cash. And what could be happening is that was the margin capitulation. That was the kind of margin call for all the retail traders that said, hey, Square Cash is the next MasterCard. Square Cash is the next Amazon. I think they're going to end up being right. But if they bought on margin, it doesn't really matter if you end up being right because your broker can say that you're wrong. Right now, 82 isn't a horrible level to say, hey, wave 2 ended. The length of wave 1 places the wave 2 low is going to take Square Cash to 339. So unfortunately, PayPal does not have a great low to trade against, but Square Cash above 82 to 87, that's not too bad. And if we look at Square Cash, I think the one big thing about Square Cash is that it forms a wave 1 and an ABC wave 2 within the cycle from 2016. So one thing that I always talk about, stocks that have more chart history, they can give more evidence, right? That's kind of the risk with more recent IPOs is that you only have a couple months, even a couple years to analyze. And I think that Square Cash has given evidence that was a wave 1 and an ABC wave 2. And this was clearly an impulse that went past the 161.8% extension of wave 1. I believe this was another wave 1, and it makes sense if this is a scary ABC wave 2. It lines up with Wayfair, it lines up with a lot of e-commerce names like Shopify, that Square Cash should be going much higher. So I think that Square Cash above 82 to 87, those are going to be the best levels that PayPal has until we get some room. But I think this is the wave 1 and a wave 2. Square Cash could quietly be not just a big beneficiary, but a big driver of the crypto boom. That's a little speculative, but we'll see. I think eBay, I think that Amazon, I think, you know, the charts are saying there could be a marriage between some of those companies and crypto. The length of wave 1 places the wave 2 low. So if we're above 82 to 85, then all these retail traders were right. Square Cash is the next PayPal. Square Cash is the next Amazon. But guess what? MasterCard and Amazon, they went to the 61.8 to 78.6% retracement in 2008, right? That's what a lot of Substack authors don't like to talk about. The growth stocks are very difficult. I think that Square Cash is going to be worth being called a bag holder. I think it's going to the 340s before a shallow wave 4 and a wave 5 higher. So PayPal, there's not a great low to trade against, but I think this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. If at any point in time we're above 310, then that would be a wave 3 in progress at the very minimum. The price target would be a lot higher than 310. We'd have a shallow wave 4 that retests the wave 1 high, and then we'd be going on a wave 5 higher. So if there had to be a level, I think it's 82. Maybe extremely tight would be 93. But one thing that I do think we've gotten, besides the fact that Square Cash above 82 to 87 is a little better level than anything on the PayPal chart, one thing that we have gotten for PayPal bulls is Shopify. These two charts are identical, right? If this was a Rorschach test, besides the fact that PayPal is a little uglier, these are basically the exact same chart. A huge 1, 2, 3, 4, 5, 5-year wave 1, right? Moats, Kagers, you know, it's the glory of every Substack author, right? But then at the discount, all of a sudden it's not so easy to do fundamental analysis, right? So the length of wave 1 places the wave 2 low says we'll be above the 1760s at some point in the future. And this is a quote unquote generational opportunity in the e-commerce sector. And I think once again, we're going to see that Shopify is in ONLN, eBay is in ONLN. And I think we could see that there's a little bit of a marriage between e-commerce and crypto. I think right now above this 78.6% fib of 391 is a little wide. A little tighter would be this kind of high of 409. So 409 to 390, I think that's a wave 1 and a wave 2. The length of wave 1 places the wave 2 low, says it might not be the bottom, but I think Shopify is going to 2,331 for a, yes, minimum wave 3 target before a shallow wave 4 and a wave 5 higher, right? It's always easy to do fundamental analysis at all-time highs, right? It's always easy to love your spouse when, you know, they look really great, right? But once they get sick, you know, do you still love them? That's when it really counts. That's when it really counts. Here's Wayfair. Wayfair, I think, is just kind of more evidence of it's not for the faint of heart. And growth investing certainly is not for those who take large positions because these stocks have the best upside. For me, it's the opposite. Because these stocks have the most upside, I can take smaller positions. And I need to invest more money in Pfizer. I need to invest more money in Boeing because they have smaller betas. And so I need a larger movement and more money invested to get the same return. Wayfair forms a wave 1 and a wave 2, right? Wave 1, Substacks. Wave 2, bag holder, bag holder, bag holder. Wave 1, Substacks. Wave 2, bag holder, bag holder, bag holder. All right, I think Wayfair is going to hold above 91. I think it'll go the length of wave 1, place of the wave 2 low. It's going to go all the way to 448 for a minimum wave 3 target before a shallow wave 4 and a wave 5 higher. It sounds crazy now, right? They always sound crazy, but that's the thing with high beta stocks. They're not going to be crazy for long. I think what we're going to find is that not only is Wayfair great evidence for the Chinese stocks, I think Wayfair is great evidence with Shopify, with even eBay and Square Cash and Amazon, that the e-commerce stocks are going to recover and very likely the crypto market with it.